We've all dreamed to start trading with few $100s and scale up to millions within few years. I mean, that's what we've been advertised by these trading gurus slash clowns. Check this.
Just to get right into it, the goal, $100 a day. $5,000 to make $100 a day. That's a goal of 2% growth daily.
Yeah, this is the 2% per day rule. Start with $100 and scale up to millions. This is the magic of compound interest. Buy my course. If you have very basic knowledge in statistics, you know that's impossible. I mean, let's say we have a winning strategy with 70% win rate, which is a good win rate. Since you want to get rich quick, you started to risk big amounts compared to your trading account. Let's say 10% per trade. It's totally possible that you can lose 5 trades in a row. And if you're risking 10% per trade, you're going to lose 50% of your account. If you started with 100k, you're going to end up with 50k. If you want to get back to break-even, you need to make back 100%, which is much more difficult. All I want to say is that there's no get-rich-quick scheme, and whatever you've been advertised from these trading gurus slash clowns, they are totally wrong. By the end of the video, I'm going to show you some back tests and stuffs that you think they are correct, but they can really hurt your trading. You always hear you need a strategy to win, but no one explains you why. In this trading psychology video, I explained when you flip a coin, there's 50% chance that it will drop on its front side and 50% chance it will drop on its back, which in trading, that's almost the same thing. When you buy stock, there's 50% chance it will go up or down because there's no other choice. But when you're using those technical indicators or fundamental analysis, you're just trying to increase those probabilities. Delta in options will give you the correct probabilities. When a stock is at the money, as I said, there's 50% chance it will go up or down. That's why when the option is at the money, delta is 0.5. That means there's 50% chance it will expire in the money. The more we increase our time frame, delta will decrease. Why? Because we will have more time to be correct. Here's an example on Moderna, mRNA. mRNA is currently $410. If we check a call option at $350 expiring in 4 days, delta is 0.98. That means there's 98% chance that this option will expire in the money. But if we increase the time frame, let's say September 3, 2021, $350 option, delta will be 0.8. That means there's almost 83% chance that this option will expire in the money. And of course, it's the inverse with put options. But if we check the options when it's at the money, delta it's almost 0.5. And even if we increase the time frame, delta will stay the same, around 0.5, both for put option and call options. So what you understand from this, the shorter the time frame, it's harder to predict the price movement. And the longer the time frame, it's much easier to predict the future price and to be correct within a specific time. That's why I totally switched from day trading to swing trading. Let me share with you some secrets of my trading strategies. Whatever these trading gurus advertise, I just do the inverse. That's it. I saw a video from Raging Bull. They are trying to explain you to cut losses at supports. Well, on my swing trades, I only buy when stocks are breaking supports. And all my swing trades are the same idea. Even my scanners, they only alert me when they break supports. This is a backtest of the strategy. I don't need to explain more. Math doesn't lie. Like, imagine if Apple have a support at $100. If Apple breaks the support, which is $100 and goes to $99, you should not buy because it broke supports. It may fall forever? Of course not. You're having a better opportunity to buy. Stocks are not just random charts. The stocks have actual value behind them. When they are breaking supports or resistance, the market cap of the actual companies are changing. And another secret, my scanner just alerts me on a 1 minute time frame if the RSI is dropping below 30. Why? Because when it's a very clear support, usually there's many retail traders putting stop losses at that area. And if there's many stop losses at that area and the stock actually drops below that, on a 1 minute time frame there will be a small sell-off. That's where I get in. And I wait for the stock to bounce back. It doesn't mean when a stock is breaking support that you should cut losses or you should not buy at that point. If you like to buy a stock at $120, why you won't buy at $100? Another example in day trading from Warriors Trading. I know many people that they followed Warriors Trading and they actually lost money following him. I know he always say don't follow me, but you're actually paying him to follow him. What are you doing then? So anyway, if you watched him, you kind of know his strategies. And if I know many people that they are actually losing buying the same stocks that he's buying, I made the scanner to short those opportunities. And I was actually performing really good. I was almost doing $5,000 per day. But of course I was taking huge risks. I was greedy at that time. I was doing really okay for a month until in January I made a bad trade, which is on GameStop. We all know what happened. I was short around $25 and it squeezed to 500 and I lost around 70k. So manage your risk, guys. I remember when I just started to trade, I started to search some YouTube videos and I came up to Ricky Gutierrez. I watched some vids and in the description there was a link that he's going to send the secrets of his trading strategy. So I signed up for the mail and he did send a PDF. I was like, wow, he's sending a PDF. So I just opened the PDF and there was a fishhook and it says this is the secret trading strategy. What's that? When the stock is dropping, wait for the stock to make a fishhook pattern and that's where you're going to buy. I was like, what? Now we know that this is so dumb and many new traders who don't actually know what's trading, they actually believe him and they buy his services. And those guys fall into the 90% statistics. After some years of experience in trading and some backtests, I can say that this concept is totally wrong. When they're waiting for the stock to drop, they wait for a confirmation to bounce back and that's where they buy. If you're doing this, you're totally misunderstood the concept of buying low, selling high. I only buy on red days. You should actually buy a stock when it's dropping. Again, it totally depends on the strategy. But if it's a good company, a large cap for example, not a penny stock, and if it's dropping without news just because the market is dropping, that's actually a good buying opportunity. You should not wait for the stock to bounce back and you buy later. This is another backtest that I'm actually proving that what I'm saying is correct. I only buy stocks on red days and they are dropping. And of course they are large cap stocks, not penny stocks. And I sell whenever I'm in good profit. Of course I have some targets. There's one more thing that I rarely see people actually use it, is that they use time in their advantage. You know that in options there's theta. For example, if theta is 0.1, the option will lose $0.1 per day. So if you're buying options, time is actually working against you. But if you're selling options, time actually works with you. This is an example on an account that I trade on, which I only sell options. You see that my theta is $220. That means I'm getting paid $220 per day just because time is passing. And if you're buying options, you're actually losing $220 per day. And the more out of the money you sell those options, you actually have more chance to collect that premium, because theta will become higher compared to the option price. So that's how you can use time in your advantage. And the last thing is that you need powerful tools to trade. This is the most important thing. When you build a strategy, you need to find those stocks. You need powerful softwares to find those stocks. And you need a software to backtest those strategies. For example, I use Trade Ideas, so I can build the strategy, backtest the strategy, and daily it will show me each stock that falls within the strategy. So each time I take a trade, I know my probabilities to win and my risks. If you don't have those tools, it's like you're going to a war with few soldiers and the enemy team have tanks. Your probability that you're going to die, it's really high, unless you can dodge every single bullet. There's one last thing that's really important, is that you should subscribe to this channel. Thank you and see you in the next video.